Hello everybody, welcome back for another video. Hope you're all having a great day and that you are all doing well. Just woke up, have a lot of energy. Let's jump right into it. In a recent interview with SFOX, Charlie Lee, the former Google employee and computer scientist who created Litecoin, spoke about Satoshi Nakamoto's anonymity in the cryptocurrency space and the Bitcoin ecosystem. He furthered the conversation about the advantages of being the public face of Litecoin to contribute to the ecosystem. Firstly, Lee established an opinion that the presence of a public face in a decentralized system is an oxymoron. In hindsight, he believes that he should have left the project on an anonymous note. Henceforth, the blockchain scientist mentioned several advantages and disadvantages of being the face of Litecoin when willing to work on its progress. Under advantages, he put down such points as the ease of SegWit activation for Litecoin due to his public appearance. According to Lee, it is harder to carry forward an ecosystem that has many parties working against it when the creator is not around. More so, he was able to push Litecoin forward for SegWit activation because he was around to facilitate it. In his words, he said, 2 years ago, I saw that Bitcoin was having all this trouble with activating SegWit. I saw SegWit as an amazing feature, but there was all this FUD around it. I realized I could help out by pushing Litecoin towards getting SegWit activated. Being its creator, I was able to make that happen, end quote. He admitted that there are disadvantages associated with a cryptocurrency having a face. He further explained his point by citing Litecoin as being more centralized than Bitcoin. Subsequently, Lee shared that an attack could easily be launched at him on the pretext of targeting Litecoin. Therefore, concluding his thoughts, Lee conveyed that he might have to eventually step away from the ecosystem in order for it to become more decentralized. He said, I'll eventually have to step away from Litecoin. I'm talking years down the road when Litecoin is used and more as a real world currency. At that point, it wouldn't make sense for the creator to still be around dictating things, end quote. I said this many times before. I felt like, remember when he sold all of his Litecoin and he said that he did it for, what was the exact reason that he gave? I can't remember the exact wording. I had a feeling then that he planned on already leaving Litecoin. It could have been the prices dropping that actually stopped him and also Vitalik. We also had news a couple of days ago, multiple times, that Vitalik had threatened the cryptocurrency community that he planned on leaving, and he said his reasons were because the space was childish, and Charlie Lee says because that Litecoin is not decentralized enough. Whatever the case might be, I had an inkling, if you will, that Charlie Lee was at some point going to leave the project. The fact that he's mentioning it or is now openly talking about it, I think he won. I have a feeling he probably should have left around 2017. That's not saying that I don't care for him or that he should have left. I'm saying, like, if this was his original intention, selling it off at the all-time high was kind of I think something that was already planned. I don't think he planned on selling it at the all-time high. That's just kind of how I feel. I feel like he was planning his exit and therefore he was trying to sell it, but I feel like he should have never mentioned that he was going to sell it. And 3, I told you guys this before. I've seen the creator of EOS. He didn't leave the project per se, but they're always moving on to other projects. I told you, I'm pretty sure I can say within the next 2 or 3 years, I think Vitalik is going to move away from Ethereum and create another coin. Same exact thing with Charlie Lee. He's also been boasting about a bunch of other coins that he also likes, and he thinks that the projects are kind of cool. And I'm pretty sure that he's probably working on the code as well. That I don't know Charlie Lee, like I said, but I'm pretty sure this is probably actually what's happening. He's going to move away, and I can only assume that he's going to then work on the other projects. It seems like this has to logically happen if you want your coin to be more decentralized. Because I told you before, I was like, so many crypto projects are doing really well because they have a face. As humans, we're used to looking on our computer or looking on the news and stuff like that to be able to see a face of a company talking about it. And when they have something positive to say about it, this tends to push up the price up. But Bitcoin does not have that, more or less, depending on who you ask. But the other coins definitely do. And I wonder how well they're going to fare when there's no longer a person who can send out tweets or go to events, or because what is the future of Litecoin if Charlie Lee in 2 years is sitting on stage talking about another project? Like he's spoken about Nano before. Like that's not, this isn't meant to be like a negative thing, like, oh my gosh, how horrible. But it's like, I really wonder, like, where will the projects then go if there isn't anyone as the face for the campaign? What happens to the project? Like, are the projects being propped up in price simply because we have someone to look at, and we therefore can say that he said this, and therefore this is going to happen to the project? Anyway, let's move on. This one's extremely weird. Cryptocurrency exchange YoBit is going to perform a pump scheme on random coins, according to an October 10th tweet. A pump and dump scheme is a form of fraud that attempts to artificially boost the price of an asset through misleading or false recommendations. They said, YoBit pump in 22 hours. We will buy one random coin for 1 Bitcoin every 1 to 2 minutes 10 times. That's a total of 10 Bitcoin per project, I assume. In addition to announcing the pump scheme in a tweet, the exchange posted a countdown clock for a YoBit pump on the website. YoBit is a Russian-based digital currency exchange founded in 2015, which offers access to hundreds of digital currencies. The trading platform was in the headlines a number of times in multiple reports of suspicious activity and problems with users trying to withdraw funds from their wallets. At press time, YoBit's daily trading volume is around 228 million, according to CoinMarketCap. The community reacted quickly, with some users asking whether YoBit's Twitter account had been hacked, and others accusing the company of fraudulent activities without actually having to read the tweets that people were talking about. YoBit has been in the news a couple of other times when it comes to fraudulent things that probably should not be taking place. There was something a couple of days ago, maybe last weekend, or maybe a couple of days even before that, where we had a lot of analysts who were coming forward and saying that the crypto volume on a number of exchanges, not the top 5, but somewhere in the top 20, top 30, were falsifying their values or volumes simply because they were buying coins at will and then selling them back and forth. And remember before we were talking about crypto exchanges who were just passing coins from one wallet to another. And therefore, if you're passing 5 million from one wallet to another, and you do this 100 times a day, that is then falsified volume. And the fact that they have come forward in the open and have said that they're going to perform random pump and dumps on 10 different coins is a major red flag. I don't know how many people out there are actually using YoBit. This might be a time for some type of self-reflection between you and YoBit to figure out if you actually want to continue using that platform. That is an incredibly large red flag. You don't imagine if Coinbase announced that the 5 coins that they do have listed, that they were going to pump all 5 of them in price. The market would react accordingly. People would buy in because of the pump, and then they would sell and all the prices would crash. It'd also be a huge form of fraud. So once again, if you're using YoBit, dig deep to figure out if that platform is for you. Next up, Japanese IT giant GMO Internet is jumping on the stablecoin bandwagon, planning to launch a yen-pegged cryptocurrency in 2019. The company said in an announcement on Tuesday that it will start full-scale preparation to issue the stablecoin called GMO Japanese Yen GJY in preparation for a move into the blockchain remittance and settlement business. GJY will be issued to Asian markets in the fiscal year of 2019 via Zed.com, a cryptocurrency exchange subsidiary launched by GMO as part of its wider efforts to move into the cryptocurrency business. The firm added that the introduction of the GJY to the crypto business would help GMO settle transactions, since it also operates mining farms and recently launched a new web bank in partnership with Aozora Bank Group that will ultimately integrate blockchain technology for settling cross-border settlements. On that same exact note, we have this news. The founder of Chinese cryptocurrency exchange OKCoin confirmed its U.S. sister operation OKCoin USA will issue a stablecoin backed by these Chinese yuan or the RMB in a series of tweets. Star Zhu, I assume that's an awesome name, who also founded both platforms' parent company OK Group, delivered a highly bullish forecast on the future of the stablecoin market, which is seeing multiple market entrants this year. For those who are keeping count, this is, I believe, number 22 and number 23 of the stablecoins that we have entering the market. Embracing the tide of technology, the launch of a yuan-backed stablecoin is an inevitable trend, and it will significantly improve the internationalization of the RMB. OKCoin USA will launch a fully compliant stablecoin, end quote. Here's the tweet for it. Interest in issuing a stablecoin tied to major fiat currency has so far come from entities operating particularly in the US and Japan. As Bitcoin has reported, the Winklevoss twins' Gemini Exchange launched a USD-backed stablecoin asset in September, along with blockchain trust company Paxos. In the Japanese market, internet giant GMO, there we go, confirmed plans to release its own stablecoin backed by the yen, weeks after another Chinese player pledged to raise $13 million for a yen-backed competitor. Going forward, Zhu said he saw huge potential in cryptographic electronic money, complementing fiat both in China and abroad. He said, stablecoins are in essence electronic cash. They have the same attributes. The central bank issues the currency and then it distributes it peer-to-peer. The difference is it's electronic. He wrote on Twitter. He said, today, the amount of cash in China's domestic monetary system is not small. The dollar-pegged stablecoin regulated by the U.S. government will strengthen the penetration of the U.S. dollar 100-fold. While not revealing the methodology behind the dollar hypothesis, Zhu's optimism has been broad, if not universal. Repetition across the cryptocurrency industry. So like I said, for those who are paying attention, they've been... The amount of stable coins that have been announced, I feel like there are at least 30 more that are going to launch this year, and that's not a joke number. The fact that every other day we have news about a new stable coin that's being launched, and something about this entire sentence, for those who remember my many words that I'm always saying, I said it before, I said it's really weird that we had, first of all, we had Tether, which is an entirely different conversation. But then we had about 7 other stablecoins that came out that were trying to be pegged to the US dollar. And then we had rumors of one that was supposed to be pegged to the euro, and then the British pound, and now the Japanese yen, and now the Chinese yuan. And I think there was also supposed to be one for some South American country, if I'm not mistaken. And I said, wouldn't it be really weird if all of these things, and I think also something for the Russian ruble, if I don't know where I'm getting that from in my head. It feels like I read that before. I said, wouldn't it be really weird if we have a whole bunch of countries who end up making their own stablecoin, and that ends up becoming the like digital currency for that country, if that kind of makes any sense? Because we've had news for a very long time that the digital currency that we would get from central banks would be created essentially by the central banks. But over the last couple of weeks, my mindset feels like it's changed a little bit, where we have all of these companies who are creating these things, and they constantly say that they're compliant, which leads me to believe that they are they've been working with governments in some sort of way, or some type of economic consortium, if you will, in order to, I don't know. I feel like that this could lead up to something. I'm not sure if we'll be using, stable coins on our everyday basis. But if you're pegging them to, I don't know, it all feels kind of weird. If we end up getting, by the end of this year, let's say like 8 to 10 more major countries, like not any more of the Japanese one or the Chinese one or the American one or the euro. If we get like 8 other major countries who come forward and they also say that they're going to launch this, I feel like that's exactly where it's going to be. That will probably, I don't know. I can't even say that. I can't say they will be using stable coins to like go buy things. But it seems a bit suspect. No, like that. This is all happening relatively quick. I mean, also on the other side of the coin, the idea behind stable coins is that to be able to be a way to stabilize the market, as well as being a stable price to the other currency that you're trading in and out from. I don't know. I guess I take my tinfoil hat off. It's not even a tinfoil hat. It's just like things that are actually happening. Like I always feel so like I can't say certain things, or I shouldn't say certain things because people will think I'm like a conspiracy theorist. But I mean, it makes a lot of sense. Like, why, if you're fully compliant, the government in some way has to know that this is all happening. So therefore, why would it be out of the realm of possibility that the government, knowing that this is going to happen, would have given their blessings for someone else or a company to be able to create a stable coin that would then be used on a daily basis inside of their country? See, it makes sense, right? Not just me. Anyway, Let's move on. Next up, Uphold, a cryptocurrency exchange platform, recently announced that they will be launching the world's first cryptocurrency line of credit. This will allow users to generate yields or returns from digital assets such as Bitcoin and Ethereum. The platform also clarified that they will be adding more assets, citing XRP in particular. They also announced the upcoming launch of their mobile app while speaking about a giveaway worth $500,000 in UPUSD, another new stablecoin. They stated, "We're soon launching both physical and virtual debit cards, and we're going to turn this waiting list into a dynamic, leadership rewarding early referral, community participation, and transactional activity," end quote. The creator of the coin is part of a collaboration between the PricewaterhouseCoopers and Cred platform to audit a dollar peg stablecoin. This is focused on cryptocurrency loans to be launched in November with interest rates of 2% to 5.5%. New Alliance members are reportedly set to join, the most recent of which is Michael Arrington. Uphold will allow its users to generate a substantial yield or secure flexible credit line against their cryptocurrency holdings. These are called Uphold Earn, with a yield of 2% to 5%, and Uphold Borrow, with interest rates starting from 9%. They can utilize Bitcoin or Ethereum for these purposes, providing a non-term cryptocurrency line of credit. Uphold also mentioned that users who register before the end of this month will get 1% off interest and 1% higher yields on deposits. One, this is not a paid advertisement. I do not do those on this channel. Second, this is probably one of the most interesting bits of news that we've had in quite a bit of time, and I will explain why. I am extremely bullish. Okay, first of all, I like the idea. For those who do not know about like peer-to-peer lending, I think the idea is fantastic. If you look at documentaries on people or even people who have gotten into peer-to-peer lending, the returns that they make are astronomically wonderful. I'm not saying they're getting, like 345% per year, but on a normal basis of what people are generally getting back as returns for the stock market, peer-to-peer lending, though risky, as you don't know that the other peer is going to give you your money back, is a very lucrative market. And I've been waiting for quite a long time for the cryptocurrency space to have something like this, and this is why I am particularly fond of the coin called Salt, because it is a lending platform for people who are looking to get a line of credit or to have money that they do not have at their disposal at that very moment. This is very important because the debt market, as it were, or as it is, right now is incredibly, it's worldwide. The world runs on debt. I was listening to a podcast a couple of months ago, and they were talking about when companies start issuing debt through cryptocurrencies, it's going to cause a fervor, and it's going to help to raise cryptocurrency prices. I can't even begin to explain what they were talking about. What it comes down to is that typically before in the past, or rather even right now, how the world works, let's say you are going to the bank and you're like, I want to get $100,000 because I want to buy a really big car or something more appropriate, like you want to buy like a large piece of land. You go to the bank, tell them what you want to do. They go into the back, they talk to their manager, and then they come back and say that you've been approved. What ends up happening is that people, in order for the bank to be able to create money, it's very simple. They have to enter a couple of numbers into the computer. They have to hit enter, and that's how money is created. And this is then sent to the federal government that this amount of money has been created, and this is how we actually have money created. Banks are given the power to be able to create money at whim almost, but the idea is if you are loaning out cryptocurrency, especially cryptocurrency that has a finite amount, maybe not Ethereum in that sentence, maybe eventually they will have it, what you create a system where not only do you know how much extra of a coin is going to be created every single day, we can't really mathematically figure out 100% with ease about how much money is actually being created around the world every single day. But with Bitcoin, we know for a mathematical fact exactly how much is going to be created. So when you are able to then give loans out to crypto, it's so. I should have made like an entire video on this because it's so interesting when you no more Bitcoin can be ever created. So when people are just exchanging back and forth between cryptocurrencies, it's going to cause a huge amount of volume within the coins. I mean, I wish I was smarter. I wish I had a longer brain capacity so I could properly explain this to everyone. So welcome to number 24 of another new stablecoin. That's another thing. But the idea of being able to, and I'm still not even 1000% sure how this is going to actually work out, how you're going to be able to receive money back or a substantial yield on the money that you're actually lending to other people. I guess the yield, maybe the yield is going to be in the actual stablecoin, and maybe that's where they're actually doing most of the lending. But that's still pretty significant, being able to, I don't know. I wonder exactly how this is going to be. I'm very excited for it. And then on top of that, where's the other thing? They're also launching physical and virtual debit cards. This, who is this company? It's really insane. They're doing everything that other companies should definitely be doing. I'm pretty sure this is going, if I would say, at least in my opinion, without a shadow of a doubt, one of the major players who's been talking about getting into the cryptocurrency space over the last 5 months, somewhere around that time, they're definitely trying to figure out a way to be able to sell debt or collateralize debt when it comes to cryptocurrencies, because it's going to be a major place. And it also, so it's kind of like the idea, if you have a substantial amount, let's say I have to talk about this. Let's say you ended up getting a certain amount of coins for, let's say, $1,000, and at some point that coin ended up exploding completely in price, and you had $1 million, let's say, random number just thrown out there for math, to the easiest numbers to be able to do. And you actually ended up joining up with one of these platforms and gave the $1 million that you had from the 1,000 and ended up making at least a stable number between 2 to 5% on your money that you ended up making almost for free from cryptocurrencies. That you would, 5% of 1 million is 50,000, I think, a year, something like that. Imagine being able to make that for free from the money that you made. It's so incredibly interesting. Crypto, for what it's worth, whenever the market gets it together, the wealth that will be created and the ways that we will be able to continually get money from the money that we made from cryptocurrencies is just going to be absolutely fantastic. I didn't mean to spend that much time on this, but you have to understand how significant this is. The stable coin, the debit card thing, I am going to actually look into that as well, because there have been a lot of other ones. I want to see exactly how compliant, if you will, Uphold is. And also the actual interest rates that you can, it's not an astronomical amount. Don't get me wrong by any means. 2 to 5.5% isn't anything groundbreaking. We know that on any given day, crypto can give us 18%. But there are people who are, when they exit from crypto, as it were, they're going to be looking for more stable returns that don't have extremely high yields. And yeah, I mean, it's just going to be fantastic. At least this is how I feel about it. Next up, European regulators are determining whether to regulate ICOs as security classes sales on a case-by-case basis. This was reported by Reuters on Monday. European Securities and Markets Authority, ESMA, Chair Stephen Major told the Economic Affairs Committee that ICOs resemble financial instruments, which would place them within a specific regulatory framework. However, the regulator is still analyzing how best to regulate ICOs, which should not fall within that bucket, he said. The subsequent question is, what do we do with those ICOs that are outside the regulatory world? Will we assess that as a board? We expect to report by the end of the year, hopefully. The news comes less than a week after ESMA revealed it was budgeting more than 1 million euros to monitor cryptocurrencies and other fintech activities next year. As previously reported, the agency's 2019 annual work program set aside 1.1 million euros for activities revolving around financial innovation, including crypto assets. At the time, the document stated that ESMA's objective over the upcoming year was to achieve a coordinated approach to the regulation and supervisory treatment of new or innovative financial activities, end quote. I was watching something a couple of days ago, and they were saying the entire security thing, when governments right now are trying to figure out exactly who is or what is a security, what is a commodity, what is a currency, what is this, what is that, how will this be treated, who has the jurisdiction over this entire thing. A lot of crypto people who are creating ICOs have begun to wise up to this, and what they're actually doing is something very similar to what the EOS team did, in that you create an ICO, you create a coin, and then you hand over the project to someone else, therefore removing yourself from it, because the expectation of profit that would be had comes from then the I can't remember exactly what the loophole is. Like, it should be the creators of the coin, but if it was handed over, then therefore you have no liability in the. It's all very interesting, and also on the same exact, or rather the other side of the crypto coin is that people are creating ICOs, and then they're kind of just launching them into the world, and they're expecting other people around the world to grab onto these projects and kind of update them and make them stronger the same exact way that Bitcoin was. Like, there's a huge movement right now, maybe not gigantic as large as it should be, but people are trying to replicate the way that Bitcoin was launched. Not to say that they're trying to get Bitcoin's price or Bitcoin's amount of fame, but the belief is now that if you are if you're trying to get away from the idea of centralization, or if you're trying to get away from the ICO that you had before, that you simply create a coin and then you dump it out into the ecosystem and hope that other people latch onto it because they like it and then continue to develop the code. And this is kind of what's happening with Bitcoin. Very interesting. Let's hope. I mean, 2019 is not that far away, but this could have they could have said like end of 2018. Anyway, last thing that's happening today is when I first woke up, the market fell down. It's continuing to fall down. No news as of now as to why this is happening. I've searched around. Tether's going completely insane because people are constantly buying in and selling the coin on a nonstop basis. Should anything come up or I figure out exactly what's going on, I will definitely update everyone. But as of now, the market is down. People were commenting yesterday. Rather, I woke up this morning and was looking through the comments, and it's like a firestorm of activity. With when I was talking about the one world currency, and people were replying that the stock market was going down and that crypto was ready to skyrocket. And then I woke up this morning and the crypto market was also down. So let's see exactly what ends up happening. We've seen before in the past as well that when the stocks have fallen, crypto has also fallen, which is not a good indication, because the idea is that crypto should be stronger, or is like an alternative to the stock market. But I'm going to be honest with you at the moment. Crypto is not an alternative to the stock market, especially when you are having daily volume this low. That is a very big indication that no one wants to dump their money into it, because if anybody did dump their money into it from traditional finance, we'd have skyrocketing prices. We need more liquidity in the market. We don't need traditional finance to be in the market, but when traditional finance does eventually rear their head into the cryptocurrency market, prices will go up, and stability, at least to a certain degree, will be achieved. But as of now, like I always say, this is the market that we're in. These are the things that we're used to, and let's see, or let's hope, if by the end of the day prices try and recover a bit, or if, I don't know. I mean, Bitcoin was at exactly at 6,000 when I woke up. It moved up a tiny bit, but even since then, the price has been kind of slinking down. Thank you once again for all watching. I hope you all are having a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. I hope it's absolutely incredible. Thank you once again for watching and or listening, and I will talk to you all soon. See you.